All right, this is the week ahead where Scott and I take a look at some upcoming earnings, other events that could move markets to just kind of let you plan out your week and be prepared for headlines that could disrupt either names that you're already invested in, stocks that you're looking to trade, or overall markets in general. So, really, this is to help you just prep for the following week and get everything underway. But what we like to do first is take a look at the macro. And certainly, as we head in towards the back end of earnings season, the macro is going to take a much bigger focus. The corporate news will continue to come out in the form of earnings and investor days. And we'll take a look at some of those as well as conferences. But the bond yields are the primary driver right now in the markets. And that is where we want to start our focus right now because there is a big, and we've been talking about it for the last few days here. I know Chart Trader's been mentioning it a lot, and there's bond auctions going from Tuesday through Thursday of next week. It's a 3-year auction on the Tuesday, a 10-year auction on the Wednesday, and a 30-year auction on Thursday. And market participants are going to be keeping a real close look at these names. One of the reasons why yields have been going lower is because of the lack of participation from the international side, meaning that simply non-direct buyers just have not been as big of purchasers of U.S. Treasuries, and that obviously means less demand and a little bit more supply, and you got to drive up the yields in order to entice people into it, and that's basically the relationship there. And so what we'll be watching closely is the participation and the yields that this paper is selling at going out the door. Remember, this is coming in front of expectations of the U.S. passing a 1.9 trillion fiscal stimulus. If we're seeing them have trouble selling paper ahead of that stimulus, that's really going to raise concerns about how expensive the borrowing is going to be in order to push that stimulus out. And that's the big story there. Obviously, the big story in the markets, if you're looking at the 10-year, you've seen us bouncing up against that 160 level. And these bond auctions are going to be a key driver of what direction we go there. The pullback to 155 today has been a key reason why we've been able to bounce back in the markets. But we'll be able to see if we can keep those gains tomorrow based around these bond auctions. Now, over the weekend, ahead of those bond auctions, we do have China out with their annual parliamentary meeting. Over the weekend, we already got the big headline, which was their growth expectations of 6%. So that was a little bit light, but I think most people are kind of fluffing it off as them just being conservative. Now, what we also will have is a little bit more commentary around financial conditions and lending, and that's going to be something that markets are going to keep a close eye on. Chinese officials have been talking about reining in some of the lending here in order, which would possibly be a positive in the current environment, as it would allow rates to cool off a little bit, perhaps, and some of the inflation prices that we've seen moving higher to also drop down. And we're going to get into inflation here in a second. Also, over the weekend from China, we will get their latest trade data statistics out on Saturday. So that should really help set the table come Monday morning when traders return to the desk. Now, in addition to China's trade data, they also are going to have their inflation numbers out Wednesday, which will be something that we'll be keeping a close eye on as well. Finally, overseas on the macro front, there's an ECB decision next Thursday. Christine Lagarde, the ECB president, isn't expected to announce any major changes to the current monetary policy, but she is expected to strike a dovish tone in order to combat bond yields. And this is going to be the first big central bank meeting that we're going to have the following week of the 17th. The Fed's out. BOJ and the Bank of England are all going to be out. So we're going to see a concerted effort by these central banks to try to combat the bond yield action. The ECB is also going to have 2 U.S. Treasury bond sales in their back pockets when they're going to talk, and that could really navigate how dovish Miss Lagarde's going to be. Finally, here in the U.S., it is a pretty slow week on the economic macro front, but we do get CPI numbers out on Wednesday and PPI out on Friday. So obviously, key numbers for us to keep an eye out on as we get the backdrop of those bond sales. So big week on the macro front, and these are going to be the key things that are going to drive the overall tempo and trends in the market. So with that, we want to start moving over into our corporate focus. So I'm going to bring Scott back in.
I'm here, Gav. How are you?
I'm doing good, Scott. I'm doing good. So I'm just going to knock off some of the conferences here,
Mm-hmm.
and you could you could feel free to jump in with any ETF action
Mm-hmm.
that you're seeing in it. But starting off the list of conferences of note that we have next week, we got Deutsche Bank's TMT conference, which is their technology and media. So a lot of internet plays here, a lot of the XLC will be in focus. So we want to keep an eye out on that as the conference headlines cross. We also have UBS Global Consumer Retail out. So retail was one of the few things that didn't get hit pretty hard this week, Scott. So really curious to see some of the commentary that we're going to be getting out from them. Now, we have recently gotten a spat of earnings, so I'm not expecting the narrative to change too much around it, but definitely one of the more interesting conferences. And just so you know, if you do want to follow along with us, if you look up at the top under the calendar section and you go to events and conferences, here's a nice list, and you can move over to the view all, which allows you to see all the conferences that are going to be coming out, and you can really get a good feel for what we're looking at for next week. But in addition to that UBS Global Consumer Retail show, we also got a Wolfe Research Fintech show. So some of the PayPals and Squares of the world will be presenting there. So again, a beaten up space that I think is providing some opportunity here for the markets. Square is definitely a name that's firmly on my radar, as is PayPal for that matter. We also got RBC Capital Markets with their Global Financial Institutions Conference. Barclays has a global healthcare, so the XLV is obviously something that we want to keep an eye out on. Truist has their own TMT, technology and media conference next week, so again, remaining in focus. Susquehanna with their annual technology show will be going on. Baird has a vehicle technology show, so we've certainly seen a lot of these EV plays, a lot of the LiDAR plays that people have been in get rocked this week. I would note, Scott, my MGA, which was the play I had for EVs, that held up real nice in the midst of all this.
Yeah, that looks beautiful, man. Beautiful.
So, valuation's still cheap, and I prefer to play a EV play with about 38 billion in revs than one that has no revs, Scott. That's just me.
Yeah.
We also got the Goldman Sachs Chemical Conference, so the XLB could definitely be in play. That's definitely another area where we saw it hold up pretty steady. And finally, the HC Wainwright Global Sciences. I took that MRVI play today. It's holding up nicely here. We've banked some profits in that and in Twilio, TWLO. So I'll likely hold both of those going into the weekend. But
can I cut you off there? It looks like
certainly.
DraftKings is going to have an investor day as well on March 9th.
Whoa. No, I didn't skip over anything, Scott. I was going to go through the earnings and then the investor day.
All right. Put me in my place, Gav. I'll go back to looking at charts.
Right. You go look at the pictures.
The charts look so pretty, though. Yeah, I'll stay with what I know. All right.
Yeah, we'll definitely get into all these investor days here. There's a number of good ones out. Not a lot of earnings, but that's it on the conference side of things. So we are going to break into the earnings and then the investor days that are coming out, and we'll get you all set up for those.
All right, cool.
So first thing we want to talk about, Scott, we just talked about EVs. We got Xpev, XPEV, one of the Chinese names, of course. This thing's been hammered since it popped up to $72 back in early December. This was way ahead of the selling in the EV space here, Scott, but really it's picked up a lot since breaking below its 50-day moving average back in mid-February, dropping from 46 to 27. So I feel like we're going to see this chart a fair amount coming up here in our discussion, Scott. So what's your general thought on Xpev and when you see something like this in the charts?
So trading below the key moving averages, obviously really poor performance the last couple of weeks. Is there a bottom in place somewhere around $23 to $25? That's a possibility. I would say yes, it should find some sort of support down here. That's going off the IPO debut price, which is around $23, and the IPO high, which is around $25, which was the breakout point in early November. So in theory, prior resistance should act as new support. If it drops down to 23.25, that could be an area to watch. It did bounce a little bit off the 25.27 area today, so kudos to you if you caught that a little early. But yeah, we'll see what it can do. It's 23.25 is the if you're a little bit more longer term on this play, it has to stay above that level. I would not want to own this below $23.
All right, next up, another interesting one, Scott. I know you're not a fan of this one, but that's Stitch Fix, SFIX, from a business fundamental perspective.
Hmm.
But the last 2 quarters been producing some decent numbers here. We're seeing an increase in usage by its subscribers. Now, this is one that could find itself on the Reddit chart just because of the stock makeup, where we've got a float of 60 million and a short interest of 14.4%, sitting right on key support at this 70 level. It's trading at about 3.8 times price to sales is what I'm seeing.
Hmm.
Yeah, I guess so. 1.76. Yeah, okay. Which isn't nearly as bad as I would have expected to see. Obviously, no earnings, so it does not have any 4Ps. So the valuation's not egregious as I would have thought on it. Now, 3.8 is pretty expensive for retail for the most part, but you could argue that this is a tech/retail name, I suppose. But sitting at key levels coming into this report, it needs a good one in order to avoid any sort of additional selling.
Yeah, it's not that I'm against the stock. The stock's acting great. It's really strong. It's been up the last couple of months. It's just that I don't
The business model, yeah.
I don't. I'm never gonna pay somebody to go pick out my clothes for me. I don't.
Yeah.
I'm just not that fashion sort of savvy kind of guy. But obviously, there's a ton of people out there that do want to look good and have match their clothes. I guess I don't know. So anyway, it looks okay right now. Technically, it's $70. Obviously, is the line in the sand that I drew right there on the charts, going off that December high. You've seen it probe it a couple times, late February, and then here the last 2 weeks, and it is holding really well, even though it's slid below the 50-day moving average and below the 20-day moving average. So could definitely be an interesting mover next week. I would just say pay attention to this downtrending line. As of right now, it needs to get back over $80 to get something moving to the upside. Right now, like I said, it's being defended below 70, but if it starts to falter below that level further, you got to run into some issues. Next support's down here around the gap around $50.
Okay. And just keeping an eye out of Cleveland Loretta Mester and Raphael Bostic, and Atlanta Fed President Raphael Bostic are both speaking right now, striking dovish tones. So we'll continue to monitor that and see if it has any impact. Moving on to Tuesday, Scott. As we said, it's a pretty quiet week for the most part, but we do have Dick's Sporting Goods coming out, DKS, of course. One of the few that you're going to see probably here holding its 50-day moving average. Tested it earlier this morning with that flush. Never tested it beforehand, I would note. And now we're seeing it pop a little bit. I did see that UBS raised its target to 75 from 64 yesterday on anticipation of some good numbers. So also keep an eye out on Yeti too, which is one of the big sellers at Dixie for any commentary. But DKS looks like a pretty good chart. We were talking about those retail names just a second ago.
Yeah, you gotta love the stocks that respond well to key technical levels. In this case here, Dick's Sporting Goods, DKS, fell down to the 50-day moving average around $68 today. Holding up great the last few days compared to a lot of technology stocks and NASDAQ stocks. Did bounce right off of it, so you have a nice looking move there. Definitely keep this one on the radar. Gav, we were talking about Hibbert recently, HIBB. Did they have earnings
They
today?
reported this morning, yeah.
Not really a horrible looking reaction. I mean, it's down, it traded down maybe 5 to 8% or so, but right around the 50-day moving average. We highlighted this level yesterday. You could see the line was already drawn in there off to the October high and the January highs at $55. Came underneath the 50-day, $55, bounced right off it. It's holding in okay for Hibbert, so I wouldn't suspect that Dick's Sporting Goods does something similar, maybe even has some move to the upside.
Yes, not really horrible reaction. And
Well,
for today and relative purposes, that means
uh,
it's a big buy.
do I even have to go and remind everyone what's happened to Costco this week? I mean, it's
Yeah.
just, there's been some, and Walmart and other big downside moves. Okta, another one that we played here this week. So it's just so it can just go through. So not horrible reaction. Yeah, I think that was a good wording on my part. No.
Yeah, no. I agree. I think it's just funny in the parlance for today. That is a positive, right?
Hmm.
Here's one that's looks great, Scott, in terms of not rolling over and nobody wanting to sell. Thor Industries, THO, sitting right on its 20 and edging higher here. Not very often you're going to see a name that you can say is clamoring near 52-week highs.
That chart looks fantastic. I have to agree with you. Nice consolidation here. You hope it breaks out over 130, gets into fresh 52-week high ground. Just a beautiful looking chart there overall. I'd say it looks great if you can give it some wiggle room above the 50-day moving average around that 112, 110 area. It looks solid. Yeah.
All right. Then we got AVAV, AeroVironment, the drone play, breaking down a little bit here. It is trying to bounce back and hold that 105 level.
Hmm.
Got within a hair of that 95 gap down. That's the breakout there. Let me just double check. I think it was the FAA announcement when it broke out back in mid-January. Uh, see, this would have been it was an upgrade at Baird on that day. Yeah, they were acquiring Arcturus UAV, which was expanding their product portfolio. Obviously, the market was in a pretty good shape there, and I'm just about positive that's also when the FAA headlines came out because that's when I started discussing that in UAVS, and they both started running right around that time frame. So AVAV, though, their results tend to kind of come in line, so I wouldn't be overly excited about this one going into earnings, and I'd be a little cautious still given the breakdown that we're seeing.
Yeah, it's back below the 50-day moving average, which should always raise a red flag, especially when you've just been a pretty big downtrend. We've seen a lot of the market obviously do the same thing this week, so just some red flags across the board to be a little bit more cautious than usual if you haven't changed your gears on that already. I wish I was tracking this one a little closer. It was not on my radar because Gav, I love stocks when they come into nice round psychological levels. This one probed $100 today, right inside that gap, and then found support and just reversed course today. Would have been a fantastic day trade, but it's just not a name that I tracked there. Wasn't on my list.
All right. Next up, we've got NARI Medical. It's a commercial stage medical device company. They basically focus on treatment and treatment for patients suffering from venous diseases in the U.S. There's another one too that I would be keeping an eye out on if they do good, and that is MDWD, Scott. This is a name that I came across. It's been holding up pretty well. Do a lot of burn victim treatments and varicose veins as well. So we will keep an eye out on this NARI. I know it's been a popular name for Trend Track. I don't know if he's involved in it right now, but another one that's kind of breaking down below that 50 and trying to recoup some of the recent losses as it tries to find support around these low 90 areas.
Yeah, that's so again, it's very similar chart patterns going on here. I'm not going to waste too much time on it, but breaking below the 50 is a red flag of caution. However, you look to the left of the chart, usually you can find some previous resistance level that should turn into new support. So that gap breakout from early January above the December high, right along that $90 vicinity. You can even go down a little bit if you want to be nitpicking around 88. Did hold up perfectly today, and stock prices bounced off it. So that's your line in the sand going forward. If you have a little bit of wiggle room with this name, I'd watch the 85 area off the summer highs from last year. Below that, I would really not be a big fan. It could be testing 80. It could be blowing through that level. To the upside, you really want all this stuff getting back above the 50 moving average.
All right. I don't even know if we want to discuss this next one, Scott, but MongoDB, which I'm sure we will see post strong numbers, rip back higher, and we will not touch. But however, I would say this, Scott, we might have some time to wait before we feel the need to get back involved with it because
Mm-hmm.
talk about a name that did not take part in the bounce here today. MongoDB would be what? Do you disagree?
I mean, it's up 15 points off the low, and it bounced off our psychological 300 level, which was not on my list this morning.
Yeah, of
I
course not.
posted 15 to 20 stocks all at
Yeah, but,
psych levels. I didn't have this on my list
15 points, it's a 5% bounce.
for a day.
You know,
It was a day trading list. It was a day trading list, but this I can't believe I forgot to put this one on at 300. Uh,
yeah,
I'm,
58 million float, 10% short interest. I mean, you're excited about this bounce. I mean, for me, I don't think that this is the type of bounce that you think that shows that it's now a buying opportunity.
no, not
I
at
mean,
all.
I,
But
I mean,
for
if it's able to hold the 300 level and post really strong results, I mean, personally, I'd love to see it get flushed down to that 200
hmm
day, which is at
271,
271.
yeah.
And I still think it will because it seems to be in a little bit of no man's land at the moment.
It is. That's true. And the market itself is kind of sketchy, and it's below the 50-day moving average. There's a lot
Right.
of reasons to it, but I'm talking day trade, Gavin. I had a list out this
Yeah.
morning. Just stocks that were coming into nice round psychological levels. Netflix was one of them, right off 500 and the 200-day moving average. AMT was one of them, coming down to $200, which again didn't bounce American Tower, but it bounced a little bit. But it didn't really do as well as like something like the Ulta trade that we took off of 200,
Right.
So I would just say MDB. I'm just kind of annoyed that I'm always missing out on the opportunities in this stock.
No, I know. I
That's
know.
all.
I got the alert for 290 set. So, all right. Moving on to Wednesday, Campbell Soup's got CPB, another one that's holding up relatively well, all things considered. That 45.50 area really been lock stock. So, if I look at the weekly, that's right on the 200 weekly moving average. You got any thoughts on this chart from a longer term perspective? Because I don't think people are really trading this one, right?
No, it's clearly a investment dividend income stock. Look at the reaction to COVID too. I don't even this one up quickly right after COVID. I mean, when the rest of the market was tanking in late February and early March, this one went up. Eventually, COVID took a hold of everything mid to late March, but then it came right bouncing back. It's not a COVID play by any means, but it's just doing what it's always done. It makes soup. You know,
Yeah.
and if you want a 3.25% dividend yield on a really stable stock, this should be in part of your income portfolio. It's that simple.
Yeah, agreed.
Don't
Uh,
expect anything else more out of it.
the next name's a little bit more volatile, and that would be AMC, of course, one of the Reddit meme stocks here. People are certainly going to be paying a close eye on it, and I'll be curious to see how it reacts to poor earnings that you got to expect we're going to be seeing here.
Yeah, it's we know it's gonna, like you said, the earnings are gonna be poor. I don't even know if they're actually open, are they, these theaters or not?
Yeah, no, they're open. I don't know what percentage, but they definitely have a few running. We just had the IMAX report a couple of days ago, so
Yeah, and how did IMAX react? Let's just take a look at that. Oh, IMAX, that was actually yesterday or today, right? So
yeah.
it just broke out to the upside there. And knowing that the Reddit crowds are kind of behind this one, it doesn't look bad technically. It actually, you're starting to see it turn back up here in late February. It does look like a pretty decent bull flag pattern going on here. It's found some support in the $7 area the last 2 weeks. It's not a horrible looking name. I wouldn't buy it ahead of earnings by any means, but it's one that I think all they need to do is say that things are turning around and they're planning on reopening. And yeah, this stock could easily be squeezing back to the upside again.
All right, and then moving on to the afternoon, we got cloud computing play Cloudera coming out here. This one was on a nice move before, kind of got chopped down. It's a turnaround play. They had their Salesforce turnover about 2-3 years ago. You also had Icon getting involved, but I believe he sold his position there. I'd have to double check that. But this one broke out of that downward trend line back in July. If you're looking at it on the weekly, Scott was
hmm
really making a nice move higher before getting chopped down the last couple of sessions here. Now back in as support at 14. So
Hmm.
want to see that turnaround play continue, but a name that we should have on our radar.
Yeah, just like every other chart, it got hit below the 50-day moving averages this week, and did find some support off of the exact level that it should find support at. Prior resistance from last summer acting as new support, consolidation from January in play there around $14, $13, bounced right off it. So that's your line in the sand going forward. I mean, if you really like the name and it gets hit, watch the 200-day moving average around 1250. I wouldn't touch it below that area, but for generally speaking. A little cautious behavior here going into earnings next week, but it is at a key inflection point around $14.
All right, next up, Scott. Usually one of the most boring names that we've seen, but as people are looking around for value in the tech space, we've seen people pile in. Oracle,
Yeah,
ORCL,
great day
and
today.
yeah, great day today, just ripping through to 52-week highs. Is it all-time high, Scott?
I can check that, but it was an upgrade today, I believe, from
Looks
this all-time
that
highs.
monthly chart for Oracle is one of the prettier things that you'll see out
I've
there.
always said I've always said this.
Yeah.
Every time we talk about this about earnings, this is another one I throw in that thing. I'm like, just buy it and put it in your long-term portfolio. It's not the sexiest stock in the world. It's just gonna be, but it's one of the most steadiest names I've seen on the monthly charts for like 15 years.
Yeah.
Here it
And
is.
and the
All of a
company
sudden, now it's a
and the co-
momentum play.
yeah, and the company is expected to see accelerating growth due to its cloud mix and a better IT spending environment that people are seeing out there. So fundamentals are strong behind it too, Scott.
Yeah, I mean it's funny. I can't remember the last time it's actually captured some momentum, and it's definitely taken hold here this year. So
Yeah.
I like it. It's all-time new highs. You got no resistance. You hope that you know they can actually show us the money in their fundamentals to support the technicals.
All right. Next up, we've got Bumble, BMBL. They'll be out Wednesday night. This is, of course, the dating app site. It just picked a bad time to IPO, I think, Scott, right? It opened up for trade. Where did it open up at
76.
76?
Yep.
And, had that big pop, and since then it's just been rolling over. Not the type of reaction you want to see for a company that is IPO in here. So,
Yep.
what's your thoughts on Bumble, Scott?
I have that IPO theory. Don't go near it until you start seeing something show up on the chart that's worthy of actually trading. And you look at the first couple days here, there's really not much going on there. Very choppy activity uh, around that $76 area that it made its debut. And then it started to take out that IPO lows, came under pressure, started to turn back up in early March. Looks like money flow is going back into it. And then you got the rug pulled out from underneath you, as most stocks did in the space here this week, and fresh lows, which is not really the prettiest thing you want to see with an IPO trading underneath that IPO range. So we'll see if the numbers come to the rescue, if they actually can, show some sort of encouraging growth in their top and bottom line. But for the most part, I mean, maybe you get what day is this, Kevin, coming out?
Wednesday afternoon.
Yeah, so maybe 2 or 3 day trade back to the upside. Maybe you got it going on there. But for the most part, with IPOs, I don't like them below their debut price. So traded underneath $76. I wouldn't really look for anything spectacular, strong upside movement happening until it cleared $76.
All right. And if you're curious, Bumble's IPO price was 43. Not saying that we will see that, but if it did continue to sell off, 43 is the level that you probably want to have on your radar.
Yeah, 45 million shares in the float, so it's a pretty volatile name too.
Yeah. Okay, we got JD.com, Scott, out
Mm.
Thursday morning. Uh, Obviously, a lot of concerns around Alibaba and the way that the Chinese Communist Party came in and took control of that. And, they're really looking to taper any strong Chinese tech names because they just simply don't want to lose control. Kind of like what you've seen probably with Facebook and Twitter and everything really just gaining so much strength there in the U.S. They
That's
see
true.
that
Yeah.
and they want to rein that in. But you do wonder if JD would be a beneficiary of this because, that's obviously a small competitor to Baba, but with Baba's troubles, it could be JD's growth. So pretty good looking chart overall, but it is testing some key levels here and is up below the 50.
Yeah, accelerating top and bottom line. Looks and the technicals are there to support it. So you have a strong fundamental company along with strong technicals. Look pretty solid. Yeah, it struggled below the 50-day moving average here, just like everything else, but it's got some decent support above 85 recently. I'd say that's the line in the sand that I'd be watching, $85. Yeah, we'll see how it responds to earnings.
All right.
I don't think it's gonna be racing up to 100 ahead of time. I'd be a little surprised if it did that.
Okay. Here's a big COVID winner that's coming under a little bit of pressure. That's DocuSign, DOCU, slipping below the 200-day moving average here today. Is trying to recoup that going into earnings at the moment, but I'd be a little cautious of this one, Scott.
Yeah, obviously big expectations for this growth name. Big winner for COVID, signing things electronically as opposed to being in person. I know I did it for my taxes last year and a couple other documents I had to sign. But this is a concern. It is not only was it below the 50-day moving average a week ago in late February, but then it started to accelerate and break below the 200th, which is a concern. Also, I haven't been pointing it out too, but we should also be paying attention to the January 1st or whatever the beginning of the year was, those levels as well, because that essentially puts these stocks year to date in the red. Based upon their January opens and their December closes, so you'd have to be a little bit cognizant that this is a laggard, to say the least. Even though it's been a strong performer, it's starting to give back those gains technically, and there is some concern. You do have multi-month support levels around 180-ish, 187, 185-ish, where it did kind of bounce off today. But it's got something to prove. It really needs to get back to the upside. It looks like a broken chart for now.
Yeah. Next up, GoodRx, GDRX. This is the consumer pricing model for people to be able to shop around for prescription drug prices. It's one that seen some long tails on it, but it
Mm.
keeps rolling back above that 40 area. And this is one of the names that I'd certainly have on my radar, given the reaction and given the markets that it's in.
Yeah, 41 million shares in the float. So this is actually a really great trading vehicle if you're not looking at
Yeah.
it. This is the IPO range, came in the opening price right around 46. So my theory is, for the opening debut price is a line in the sand as always, bullish above it, bearish below it. Sometimes you can extend it out to the range of the weekly range that it makes its debut, and you could still get some pretty good action over there. But right now it's trading below 46. Pretty aggressive move to the downside. It did find some support back down there around those lows from November and December. Very choppy name to say the least, but it's holding above 40. So let's just go with $40 being a key technical level for this one. I don't know if it necessarily would. I mean, maybe we get a little bit of a pre-earnings bounce if the market cooperates and starts rallying. This could be one worthwhile of looking at next week. Buy it above 42. Maybe you get a couple points ahead of earnings. But $46 is that line in the sand that really I think is the struggle for it.
All right, next up we got Ulta, the cosmetic shop. Pretty good chart again, Scott. One that really didn't see much selling. Was upgraded earlier today at OTR Research and seen some positive channel checks.
Yeah, Gav, amongst all the cosmetic sales, I heard that mascara was one of the hottest things throughout COVID because you had to, flaunt your eyes behind your masks. No lipstick sales went down, mascara sales went up, So obviously
Right.
this is yeah, right. And this is a benefit. This is a fantastic company for years now. It's been one of these growth names. It's gone through some troubles lately, but it looks like it's on the mend here with some other retailers that have been really outperforming the last 4 months or so. It looks pretty good above the 300 level, around that 50-day moving average.
All right, then we got MTN, which is Vail Resorts. This is one that I think Trend Tracker has also been involved in. Another nice steady upward trend. Never really fell below its 20-day moving average. A reopening trade for sure, and one that you figure is going to have probably a strong winter, considering skiing. I think was one of the more popular things for people to do, and able in terms of being able to actually
Solo.
get out
Yeah.
there. Yeah, being solo, having some distancing. So MTN, Scott, what do you think of this?
Yeah, I mean, I think it was definitely a beneficiary of, it didn't probably didn't get as hit as much. I didn't go to Vail to go skiing at all, but it's not just Vail. It looks like they have other places in Utah, California, and around the globe and stuff. But yeah, it looks great. You can't deny the strength that's in this chart. Love the fact that it was consolidating here for about 2, 3 months, broke out, and then it's been holding above that 300 level. So uh, you suspect good numbers in it. I don't know if it's baked into the price already, but generally speaking, I would just kind of say go with the trend and expect some new highs.
All right, and then we got Cloud Play Zuaro, ZUO, reporting Thursday night.
I don't know this company that well, but it's
Uh,
cloud. But
Cloud computing play along the lines with Workday and
yeah,
Anaplan,
okay.
PLAN. So helps centrally manage in the cloud space for people to be able to move across management teams and to share data.
Yeah, pretty sloppy looking chart over the
Yeah.
last year. I would just say resistance is definitely in that 16 to $17 area off of the almost 2 year charts. You can see the clear resistance zone that's in play. It looks like the maybe you have some support around the 200-day, just shy of just in that 12 to $13 area. It's just really sloppy, and maybe $9 and $10 would be in next area. Just kind of watch those big wide zones right now. It's kind of in the middle of no man's land.
Okay, and then we're going to take a look at some of the investor days that we got out
Hmm.
there. Cigna Health's got CI breaking out. They got their investor day. Good looking chart here again.
Yeah, I've been talking about these healthcare provider stocks a little bit here. The IHF is the ETF I like to track. It hasn't really been doing that well. CI clearly is one of the better performers there, but it looks like if you want to play the ETF route, take a look at IHF Indigo Harry Frank. Could be on the upturn here if the rest of the group cooperates. UNH is having a great day today too.
Yeah.
And Humana, yeah, they're coming around now. They're coming around. Check it. Anthem's doing well too. Wow, they're all doing really well. I wonder what's dragging down the IHF. I have to go look at the components again. But yeah, good group.
All right. Then DraftKings, Scott. I remain long DraftKings. Didn't really buckle too much compared to some of the other names. I felt like,
Hmm.
we did see it pull back to just below 20, but definitely a nice reaction to the 50 here.
Totally, $55 right in that vicinity, bounced right off. It looks good so far. I'm a little concerned though. Kathy Wood from Mark Investments has gotten a lot of clout lately, and it seems like a lot of people are following her advice and everything. But some of these picks that she's been throwing out there, they get their initial pop, but they've been coming back in, and I'm starting to think if that's like almost becoming working against her, from the 3D printing stocks to the galactic space stuff to DraftKings to all these other hot names lately. So.
Yeah.
I think I'm not going to be chasing any of these. I think I'd rather buy them on down at support levels and stuff like that.
Yeah. No, good.
Their
Good point.
momentum seems to be kind of gone.
Yeah, and I keep seeing stuff about, are they blowing up? Are they blowing up? They're not blowing up.
No, they're not.
They're,
They're going to raise their
they're
expense ratio.
yeah, they're giving up big gains. That's all they're doing right now.
It's an ETF. They got to
Yeah.
they make their adjustments. They're fine.
Yeah. Then we got Chevron CVX, which is for me one of the top plays out there in the energy space.
Yeah, can't argue with energy. What else to say? They all look the same. They're all going up and to the right on the charts. They look great. They're breaking out to fresh multi-month highs. I'm not a fan of chasing extended upside moves, but pullbacks should easily be supported.
All right, and then we got Granger GWW getting back above its 50-day. One of the few ones that I've seen the 50-day rolling above the 20-day here, Scott, but that intrigues me for it.
The 50-day rolling above the 20. I don't know what that means, Gavin. Sorry.
Well, that the 50 days higher than the 20-day moving
Oh,
average.
I see
I've
what you're
not
saying.
seen that on any charts. I would have. This would probably be the first chart that I've seen that where the 50-day was above the 20-day.
Well, that would mean that basically the stock has been struggling over the course of the last couple of weeks, and now it looks like it is finally starting to turn a corner there. So yeah, it looks pretty good right now. So this one, like I said, it's been struggling for a little bit. Looks like I found support over 360, so that would be my ultimate line in the sand, which comes in play with the 200-day moving average.
All right, then we got cybersecurity play here. FTNT Fortinet rolled over to test its 20-day moving average. Funny to see some of these charts, Scott.
Really strong.
Yeah, I mean, it's really just based in the tech names that you're seeing this devastation. But FTNT, which, I mean, you could also throw in the tech space, but not a bad chart.
It's fantastic. Relative strength is off the charts compared to some of those other names, like you said. So, yeah, I love it. I love it above 150, 50-day moving average. Yeah.
Here's a big COVID winner so far, Sono, Sono. It's recently rolled over to test its 20-day, but holding up pretty well on that 35 and over island.
I agree wholeheartedly. 35 looks great. Even if it pulled back, you got the 50-day moving average around $30 to support it. Again, you're picking some real winners here. They're awesome.
Yeah, GE, I remain long. Another nice winner.
Yeah, this is a 3-year high, I think.
I feel like we're looking at a pocket of just like glory. I mean, considering every other chart we've seen over the last couple of days, there's been some pretty decent charts there today.
They're not. These aren't. It was really the growth-oriented names and the ones that are probably leveraged, right? They're tied to interest rates in various degrees. So, and the valuations are probably through the roof, and they probably have a lot of debt. So, it is. Yeah.
Yeah. Then we got LHX, L3 Harris Technologies here. I know you've been talking a bit about the aerospace and defense. So straddling its 50-day moving average going into this.
Yeah, I mean, this is a fun stock to trade when you catch them right. It is in the aerospace group. A little bit of a consolidation pattern going on here, but it looks like it could break out over the 190 area on some good news. So I would keep that on the radar.
All right, and we got another cybersecurity play, CYBR. This one looking a little bit more like most of the charts we've been seeing. CyberArk. Yeah. I don't like the looks of this. It's kind of in the middle of no man's land for myself here, Scott.
I agree. It's in that big December move. I'd rather be a buyer somewhere down around the 200-day moving average around 120. Yeah, it's got some work to do.
All right, then next up, Verizon. We've talked a lot about this 1 to 54 level is just a rock right now, a 4.58% dividend yield. So looks good here. I'm not doing anything in my current position, Scott.
No, it's a dividend. It's definitely a dividend income portfolio play. Just look for oversold conditions on your indicators to add to your portfolio if you want.
All right, then we got Quest Diagnostic, a lot of interest around its COVID testing, of course, but the chart's looking a little old here, slipping below the 50-day moving average. I think like FLGT would be a perfect one to be watching along with this one, and we talked about that FLGT earlier, how I wouldn't want to chase it up in that 114 level, and it's certainly come back in.
Yeah, back below the 50, back below the 20. There is some concern here in this stock here, especially after that false breakout from early February that's in play there. It could sink a little lower down to the 105, 110 area. Definitely be concerned about that one. FLGT is Flugenics, right? Fulgenics, I guess. Very wild stock, more of a trading vehicle because of the high volatility associated with it. But if that one gets over 120, it's definitely worth a look. It's got current support around 80.
All right, and final one will be AT&T, ticker symbol T.
Really? You want to talk about this one?
My mom said if I don't have anything good to say about a company, to not say it. It does look good as of late, getting back above the 200-day. We'll see if it could hold above that, and it does have a dividend yield of 7.19%.
Yeah,
probably from all the money that they hosed me out of. But
Gas got a vendetta against this company. But anyway, it's a dividend income play. Don't expect much out of it. Collect your dividend, and you'll be happy. I'm not even going to talk to Chart about it.
Yeah. All right, Scott. I think that does it then for us.
Right.
We were recording this. We will post this to the site. And it seems like people are pretty happy with this, so we're going to continue the segment. But Scott, I think that's going to do it for me over here.
Okay, good.
If you want to finish up anything, I'll shoot you over some of my notes from this, and we will talk soon.
All right, great. See you.
All right,
Have a great weekend. Bye.
you too.